Hello everybody and welcome to part 3 of market structure. In today's video we're going to be going over the trendline theory, and we're going to be going over those things that I've been mentioning in the past couple of episodes, which have been talking about this trend line that price always comes back to when price is oversold or overbought and so on and so forth, right? So let's begin now. The trendline theory. The trendline theory is a theory in which we're using a trend line to try and understand the higher time frame bias, right? So let's break this down. So price can either be oversold or overbought, and understanding when this is happening is key to understand trend and structure on the higher time frame. Price usually returns to some sort of trend line on the higher time frame, and we can judge the higher time frame bias of the market based off of this trend line, right? And just a small tip is that I don't recommend using the RSI. Instead, use the trendline theory if you need to, right? And so now let's begin. So as always, we're going to begin with a diagram explanation, and then we'll move on to the live charts examples. So to begin with, let's just say we've got a bullish market, right? We saw this in the previous episodes where price is creating higher highs, and then we're also seeing higher lows, right? And so just the foundation of a bullish market, right? Now, one thing with this market is that it's not always it's not always bullish. As we understand, on the lower time frame, there would be loads of bearish structure here, loads of bearish structure here, loads of bearish structure here, right? We know that. And so there are many opportunities to sell this market. For example, here, and here, there are many opportunities to sell this market despite it being overall bullish, right? And now we need to understand, when do we do this? So using the trend line, we're not getting entries from the bottom. That's not what's going on, right? What we're doing is we're understanding whether the market is oversold or overbought, right? So at this point, the market is overbought, right? So you buying towards the top of this trend line wouldn't be a smart move, right? The further away we are from this trend line, the more overbought the market is, right? At this point, it's extremely oversold. So selling at this point would also be not very clever, right? And again, at this point, selling price at this point would not be very clever, right? Because we are on the trend line, and so it wouldn't be smart to enter an all block at this point, right? Because it's very likely that you will get stopped out, because price has come towards the trend line. We are now oversold. Price is now oversold, and so it's gonna be looking to bounce off this trend line. You know what I mean, right? So essentially, if price is further away from this trend line, right? If price is away from this trend line, essentially what's going on is that we are further away from this trend line. It means we are oversold, right? So if we are going further away from the trend line, we're oversold, right? So buying at this point wouldn't be very smart, and selling at this point wouldn't be very smart, right? However, buying towards this areas would be good, right? Keep in mind, we're always entering from all blocks or work off or anything else other than like that. And yeah, so that's basically all the trendline theory is. And now I'm gonna explain it on the daily chart, right, for Euro USD. So let's say, for example, right, I haven't prepared anything for this because you can literally place the trend line against the trend, right? So let's just say, for example, here, right, let's say there has been this trend line. Like I said, it's not always going to be perfect, or if I haven't mentioned that, it won't always be perfect, but it's just to understand, right? The closer we get to this trend line, the more we expect certain things to happen, right? So let's say we're currently over here, right? Let's just say price was here. In fact, let me just use the replay tool. How about that? So let's say right now we're here in price, and we've seen this trend line, price coming close to it, once. Well, that's the first time. Then we have it coming close to it again. Then now we're seeing, a possible to return to this trend line. Now, for us to be, for example, to be buying at these points, right, where price is furthest away from the trend line, wouldn't be that smart. And again, if we were to, for example, start buying loads at this point, right, where price is furthest away from the trend line, that also wouldn't be that smart. Instead, we're looking to buy when price gets, quite close to the trend line so that we can make the most amount of profit, right? For example, here or here, or here, right? I mean, here, I'm not sure if you would have found an order block, maybe perhaps one over here, because we are on the daily time frame, so something on the lower time frame. But we are overall bullish, right? And so buying high wouldn't be that smart, right, in comparison to the trend line. However, selling at these points would be great. So this is how you guys sell in a bullish market, because clearly we are bullish, right? We are creating, as we can see, we have this low, and we see higher lows. Overall, with this trend here, a higher low, and then again another one here, and then loads of higher highs, right? So clearly we are bullish, and but we're still able to find selling opportunities. How? Because over here we have a selling opportunity, right? We have selling opportunities when price is further away from the trend line, right? So yeah, that's the trend line theory. Now, if we move on to the bullish side of this theory, right? And let's just play price, right? So if we just take a look at what's going on here, we'll move on to the weekly actually, right? So you can see that when the closer price gets to this trend line, the more it wants to go up, right? Because at this point, price is being oversold, right? So price is going to come back up. See? This is exactly what's going on, right? So buying at these points would be very beneficial. However, selling here would not be smart, even if there is an order block, right? Because we're following that higher time frame bias. And so yeah, that's the trend line theory in terms of the bullish side of the market. Now, let's go on to the bearish side. So we've got this. Now let's move on to the bearish side. Yeah. So if I just draw this now, right? So this is our bearish market example. Now, let's just draw in this trend line. I'd say usually use the trend line technique for bull markets, right? Use it in a bullish manner because it's a bit more difficult to understand when we are bearish. So, but if we are bearish, we can use it. So, same idea, right? Price, for example, in this scenario, let's say actually that's the first touch. So let's go here, right? It wouldn't be very smart to start selling at this point, or to start selling at these points over here, right? And also, it wouldn't be smart to start buying at these points, right? Because we're getting close to the trend line. So it's the opposite to what the bullish market was saying, right? So at this point, if I was to buy, it wouldn't be very smart because we're coming back towards the trend line, right? We're coming back towards it where we have seen price seems to be, somewhat bouncing off it. Because I don't want to be saying bouncing off it because we're not getting entries from these points. We're just using it as bias, right? Price seems to be hitting off it in some manner, giving us bearish structure, right? So selling here wouldn't be smart. However, buying here also wouldn't be smart. However, buying here would be smart, and selling here would be smart, right? Within order blocks. So let me just show you this on a chart. If I just reset. Okay, so right here, perfect example, right? So I know we're on quite a high time frame, and this is way back in time. However, it's good as an example, right? So let's just say, for example, this trend line over here, right? So exactly what do we have here? We've got a trend line. Okay, let's say it's been respected here, and here, right? Now, when price is furthest away from here, right? It's all the way down here. It wouldn't be quite as smart to sell at this point, right? So, however, it would be smart to start selling as we are close to these trend lines, right? I'm guessing there are loads of order blocks within these areas where you can sell from, right? Loads of order blocks within here, and there are many order blocks. For example, within these areas over here where you could start buying, and for example, areas over here where you could start buying, right? We are further away from the trend line, so we can start buying, right? If we are closer to the trend line, it's not good to start buying. And that is the trend line theory. I hope you guys found this educational. I hope it helps. And I'll see you guys in the next episode.